Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Tuesday morning pre-market webcast. Okay, daily chart of the E-mini, and we talked last week about consolidation, about compression on the Bollinger Bands. Bollinger Bandwidth now is at 2.74, so basically 2.75, and you can see what we've done, including today, for the last 4 sessions, we have in one way or another engaged the middle Bollinger Band, which is a fancy way of saying the 20-day simple moving average. So you have these Bollinger Bands, they're the yellow lines, and they're 2 standard deviations from that simple moving average, the 20. As price consolidates, those bands compress. And what we've seen in the past is, compression and then expansion. So, the bands stretch, the bands come back together, they stretch, they come back together. What this is telling us is that whether it's up or down, if we continue to consolidate here at the 20, and we've already done it enough, okay, if we continue to do it even more, this is going to produce the energy for a very sustainable directional run and turn into something that we call a band ride. A band ride is when price rides one band or the other. So the bands open up and then they ride price. Let me give you an example. Okay, this is back in August of last year. And let me qualify this entire conversation that I'm just talking about band rides here. I'm not saying that we're going down like a rock. I'm not saying that we're going to, have the kind of velocity that we had in August. None of that. I'm just giving you an example of how the bands, which right here, get compressed and then they react. And you end up going on a band ride, compression, expansion. Here's another example. September of 2014, we had compression and expansion. So you can see, the bands, sometimes the bands are wide, sometimes they come together, but all the while it's compression and expansion. We really haven't had a band ride at all in 2016, which is very unusual. We had, you get a few decent ones a year. I know the 2 examples I've given you are down. If you pull up a chart of 2013, you'll be able to find plenty of examples of up. Although what I can say, and I've said this for years, is the only setup that the bears have consistently been able to execute in the market, even through the uptrend, the nasty parts of the uptrend, were compressed bands into a downward band ride. It's the only setup they've ever been able to truly execute with some success. So we're going to be watching these bands. What I'm watching for today is whether or not the weekly pivot, which was broken below by the bears yesterday, whether that can hold up at 20.4620. If it can, then the bears can potentially have a week. I'd be very quick to remind you that the bears broke down below the weekly pivot last week, and all they did there was lay down and give it up. We've now gone back to this 32 area overnight, and they've bounced it back up into the 42, 43 area. So, the dip buyers are there. They were definitely there at the Europe. Europe took it down to a lower low, then they bounced it. The dip buyers are going to be there. They have no fear. It's going to take a while to run them out if the bears can get it done. But the key for me is, can 4620 hold as resistance? If it can, and it can hold for a couple more days, then you start to have the recipe for the bears being able to retrace some of this uptrend. All right, everybody have a great day. Follow us at Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well, everybody.